This is Kerry Artak with Artak Advisory, and this is the video supplement for the AgriTalk show, the Monday afternoon show for Monday, October 26th. And in this particular show, I'll cover December corn, December ethanol, and December live cattle. Before I jump into the analysis, let me just remind you that if you go to my website, you obviously have by now, and you click on the AgriTalk link, which you obviously have by now, please scroll all the way to the bottom of the page and click on the free trial link. I'll give you 2 weeks free trial, no questions asked. If you haven't had a free trial before, or if it's been at least 6 months since you've had a free trial. If you're inside of 6 months, I give you 1 week, but not if it was just a week or two ago. It's got to be at least a month or two ago that I'd offer another week free trial. So there's that. Please do that. I don't hit you over the head with repetitive sales calls. I'm a soft sell. And in fact, it would actually include a consultation. I'd call you and we could talk about the markets, what you're up to, if you need any help, any advice, so forth and so on. Let's jump into analysis, though, for Monday's show. Let me start with corn. If you've been following my analysis for the last couple of months, you know that in early September, the market rejected a long-term sell signal that had played out last March when we settled below this 15-year channel bottom that had held beautifully for several years. By having closed back above this formation, the market indicated 407 and a quarter within several months, as I said then. And spring, summer of 2021 could actually yield 465 half. We are on our way to that upper level, 465 half, having settled last week above 407 and a quarter, which is essentially a 5/8 Fibonacci retracement from the 2019 high to the 2020 low. There's also the low of the monthly high from 2019 at 407 even, so we are below that right now. Let me throw some nearer term stuff at you. You saw in this chart here that I've got obviously 365 and a quarter as a base of long-term support that, if tested over the coming months, can absorb selling well into, if not through, 2021, and above which 465 half is likely into spring, summer of next year. And now that we've closed above 407 and a quarter, we're probably just 2 or 3 months away from reaching 465 half. On the way up, it should be mentioned that roughly 423 half, 424 is the December contract high. We're not far from testing that right now, and we have some stuff in the 439 area. So on the way up, we can top out for a week or so, or 2 or 3 at both 424 even and 439 even, and perhaps even at 454 and a quarter. We've got these old highs, but there's really nothing to contain this market, in my opinion, longer term, until we reach our next target at 465 half, which can, by the way, absorb buying well into, if not through, 2021. If we close back below 407 and a quarter at the end of this week, then 375 and a quarter is likely within 2 to 3, 3 to 5 weeks, which once again is the start of a 10-cent range of long-term support down to 365 and a quarter that can absorb broader market selling into next summer, essentially. Let's jump into the ethanol market, which is very corn related, of course. Ethanol is a little different. It is actually testing long-term resistance as we speak. This is the ethanol monthly continuation chart, volume-based rollover. In other words, it reflects always the high volume contract. Presently, the D20 contract. When January becomes front and center on this chart, as it will in the coming weeks, then it inherits these same price resistance areas. Right now, December corn is testing long-term resistance at 1.527 for the month of October. That drops to 1.520 for the month of November. And unless this market can get up and over this area and close above it at the end of any week, and then, of course, follow through by a monthly settlement above, this market can fall back. It's now testing long-term resistance, and I would say it's actually susceptible to falling back. How far south, I'll show you in a moment. But if ethanol decides to, if you will, follow corn on its upward pursuit and close the end of this week above 1.527, which would, of course, also be the end of the month of October itself, then bullish continuation is assumed well into next year. 2.263 then, the next big picture target. There are some meaningful resistance levels on the way up that could contain multi-week highs, 2 to 3 week highs at 1.760. We have a low of a high here last 2014 at 2.045. You've got little levels all the way up, but I don't want to confuse the matter. If we close above 1.527 at the end of this week, at the end of October, 2.263 is the next long-term objective, and it could take every bit of 8 to 12 months to achieve. But until then, please respect the possibility for this market to neutralize and fall back to support that is presently, and I don't see it happening the month of November, but perhaps by December, we could fall back into this 1.228 to 1.270 area. This band of ascending channel bottoms can absorb, I'd say, quarterly lows, seasonal lows, if or when tested on the way down. Closing below 1.360 would accelerate this 1.228 to 1.270 area. So bottom line here is holding below the 1.52s on this chart, as I showed you a moment ago, does maintain a susceptibility that over the next several months we could fall back into the 1.22s or 1.2, whatever the case might be at that time. And so there's that with ethanol. This area, by the way, before I leave it, as I say, can absorb selling, say, through Q1 if tested between now and the end of December. And finally, let's take a look at December live cattle. We had a long-term buy signal at the end of July above this long-term trend-defining 1/3 speed line. I'm not going to get into the speed line construction, but it is trend-defining. Once we settled above it, the market rallied for a few weeks, came back, tested it, rallied again, and now we're falling south again. Part of this is the rollover into the December contract, but nonetheless, this is a real sell-off, and we are merely approaching long-term support right now. I don't see the floor falling out of this market unless we close below 101.72 to 102 even at the end of this week, the week of Monday, October 26th, December contract. And once again, because it's a volume rollover chart, continuation chart, once February is front center in terms of volume, it will inherit these levels. Here's the bottom line with live cattle, December, February contract, whatever the case might be in terms of the lead contract. Holding above 101.72 to 102 even, this market can stabilize, turn higher, and into spring of 2021, test 123, summer at the very latest. We do need a buy signal, of course, in order to get the ball rolling. But in any event, this is a longer-term support area that above which, once again, the market can stabilize, rotate higher into spring, summer of 2021, and actually test 123.17. Let's take a closer look at this. This is the last chart I'll leave you with. This is the 1.101. This is the 101.72 support level I showed you in the previous chart, but kind of a blown up version of the same exact chart, December contract. It, along with the 102.0 area that I showed you as well, is our base of support, an area that can absorb selling through the rest of the year and even into next spring. If we can close above 109.80 at the end of this week, I don't see that happening, but let's say at the end of the following week of 110.67, then we should actually continue higher through the rest of the year, and by later winter wind up testing this 123.17 long-term resistance area. However, closing the week Friday below 101.72 would set the market on a secondary bearish course. I would then expect over the next, say, 3 to 5 weeks, 2 to 3 months at the very most. I think with currently heightened volatility, we're looking at 3 to 5 weeks where we continue south into the 89.25 to 90.92 region. 89.25 is the high of the significant April low, and 90.92 is an ascending 2/3 speed line off this low. It comes together and just call it the upper 80s, low 90s as a target if and only if we close the week Friday below 101.72. This lower area in the upper 80s, low 90s, able to absorb selling through winter trade and a meaningful downside continuation point through winter and into spring of next year. But at this point in time, I'm not anticipating it. I would if we close the week below 101.72, but until then, 101.72 able to absorb selling through the rest of the year, and once tested, this market can rotate up into that 123 area that you see in the previous chart over the coming months. And I think that's really all that needs to be said for this week's AgriTalk video. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.